Hello and welcome to Sectors Up Close. I'm Paul Barber. Today we're talking about the European travel and leisure sector, and my guest is Chris Beauchamp, Chief Market Analyst at IG. COVID-19, soaring energy costs and crippling inflation, supply chain snags, staff shortages. Travel and leisure has suffered a barrage of headwinds, and after a post-pandemic bounce, momentum in the sector's share prices slipped from the middle of last year. And this year to date, as seen in the Stoxx Europe 600 Travel and Leisure Index, the sector is showing losses around 12%. On the quarter, though, there has been a strong double-digit bounce on hopes for inflation and interest rates to come down and demand to go up domestically and abroad as China eases its COVID restrictions. For exposure to the sector, an iShares ETF maps itself to that index. In its diverse top 10 holdings, Irish gambling provider Flutter jostles with hotel giants like Intercontinental, caterers and outsourcers like Sodexo, but also with Lufthansa and its low-cost rival Ryanair. But is the biggest headwind yet to come a possible recession, which could put an end to any nascent recovery in the sector? Joining me now to give us his take on those themes is Chris Beauchamp, Chief Market Analyst at IG. Good to see you, Chris. Thank you very much indeed for coming back in. So let's start with the big picture if we can. We've seen something of a recovery across the sector in recent months. Is there real energy to that recovery? And how durable is leisure and travel in the face of a downturn in discretionary spending?
I think there's some energy in the short term. You've seen market sentiment across the board really improve the last couple of months, not just because of the rebound, but I think changing expectations about where inflation and the broader economy goes from here. But if you look beyond, say, the middle of next year, you do have to worry. I think the recession that everyone thinks is coming in 2023 isn't with us yet, and indeed there aren't that many signs, perhaps outside of the Eurozone, that one is on our doorstep, but perhaps further into the year is when the problem really starts to arrive. So we could be in sort of a brief holiday period, if you like, for the sector that sees market optimism push share prices higher in the short term. But beyond that, I think that the outlook becomes much cloudier.
And let's look at individual subsectors, for example, hospitality and the big caterers. They've enjoyed some demand thanks to outsourcing by clients as they look to cut costs. How do you see the prospects for big names like Sodexo and Compass?
Well, the broad-based nature, I think, for the likes of Compass mean they do have quite a bit of a moat to protect them against a recession, or at least cushion the impact of spending. Now, you've seen inflation obviously hit their margins. That should ease as we go into next year. Really, you're getting the first sense of that from the US, where inflation has sort of slowed down the past couple of months, maybe beginning to go in the same direction in Europe and in the UK. So perhaps that's something that will help them as we head into the middle of next year. I think beyond that, again, there is still that uncertainty. But I think for the moment, they do have perhaps a better defensive nature than many of the others in the sector.
And let's look at hotels now. Some suggest that hotel groups like Intercontinental are looking cheap. Are they yet to feel the full boost of the post-pandemic recovery?
I think they've had the initial wave of it, certainly, initial sort of rebound of people going back on holiday, going abroad again, so that has cushioned them to an extent. The share prices haven't really responded, actually. Intercontinental, for example, really hasn't gone anywhere for quite some time, which of course reflects the rebound from the pandemic, and then if you throw dividends in, the picture looks better. I think the problem is, as with all other sectors at the moment, where they get to by the end of next year, because obviously we're then in a recession. By then you can expect the sector to come under quite a bit more pressure.
And airlines now, which were in intensive care during the pandemic, they suffered from over-demand then post-pandemic and, of course, a sharp spike in fuel prices. How resilient are they, and how would they face another downturn?
Well, I think that they're much more resilient than they were perhaps a year to 18 months ago, with the decline in fuel prices over the past 3 or 4 months. That will add quite a bit of a tailwind actually to performance, even with the hedging that they've taken on before then. And as you say, because that sort of bulge in demand has eased, I think they're managing to sort of keep services more steady at this point in time, for the time being, I think, really. So again, with people perhaps maybe not travelling with the big flag carriers, but trading down to those budget airlines, that again, if you're looking at the sector as a whole, gives you a degree of protection.
And of course, we have to mention pubs and other venues. People like a bit of a drink, of course, to lift their spirits, especially this time of the year. But with inflation, high duties on alcohol, will that spoil the party?
It does make life a lot more difficult, and those wage demands aren't going away. Even if inflation continues to slow from here, you can still feel that in your wallets. So both workers are demanding that, and of course consumers perhaps spending less than they would have done. But I think that post-pandemic desire to still get out and just enjoy while they can is still there to an extent.
And what about longer-term patterns changing, such as working from home? What impact does that have on the sector?
Well, while it takes with one hand, if you like, for the cities, it gives with the other. So people perhaps more able to go out in the evenings closer to where they live. So if you're looking at the broad picture, it probably leads to, I think, a net benefit overall. And as we said, that still desire to go out and keep spending to an extent should help the sector through the difficult period ahead.
Chris, great to get your thoughts. Thank you so much. Chris Beauchamp, Chief Market Analyst at IG. And that's it for your roundup of the European travel and leisure sector. I'm Paul Barber, and this is Reuters.